Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this is for Tuesday, the 6th of October, 2020. Wow, what an interesting market. So the president comes back, and his first real order of business, because today was his first day fully back in the White House after checking into Walter Reed on Friday, was what? Call off the negotiations on the COVID-19 relief bill. And his rationale is that he's not making any headway with Ms. Pelosi. His statement was that she's not negotiating in good faith. Her statement is afterwards that the president doesn't care about the people. Well, the president cares about the stock market. He had to know that that was going to drop it. So that argument doesn't completely work. On the other hand, does he not care about the people? I don't know. Okay. The president got cover today from Fed Chair Powell when Mr. Powell, in front of the National Economics Conference, had said that more stimulus is absolutely needed, that we need it, got to come from fiscal and monetary policy, fiscal being the code word I'm thinking for government. The states can't make it, we know that. Big cities aren't making it. COVID is shutting down other parts of the cities. I know in Chicago, they're now talking massive cuts for our services. New York's already there. If you walk around, I have friends there to tell me the garbage is piling up again. City's not clean. Those are them. San Francisco's a mess from where Ms. Pelosi is. She never talks about that, but her own city's one of the worst in the country. And the president comes from New York. Remember that. I just am a lonely guy from Chicago, but we have our problems. There's no question. So what do you do with all this? Well, you have to live through it because it's interesting. It's in front of the election. So understand the volatility you're going to get and things come out of nowhere. Politics are what they are. Some people never thought that we'd get a deal done in time for the election. It looks as though they're right and everybody else is wrong. But to a man, people think that after the election's over, there will be, whoever gets in, there's going to be another COVID relief bill then. Unfortunately for the people, now it's not there. What about the airline stocks? They needed $25 billion. Do you honestly think they're going to get partisan bills to go through here to just support them on their own? Could happen. Nothing stranger than this case of politics. But without that money, what do? It's going to get worse before it gets better, is what I'm saying. So we know that we filled a gap, I say it each time, in the tech sector, and now the sector came down. The market is now again acting a bit on the strange side. If it gets itself under 114.48 in terms of the uptrend, which has been in place of higher lows and higher highs, it's over. All the market needs to do is take out today's low, and immediately you get a lower high. And if you take out 114.48 in addition, you have lower lows. So that is one of the things you got to look at. Where are the moving averages? Well, it's right where the market would be dropping to, the 114.55 level. So regardless to me of what goes on, you're going to fight a battle in that general number. That seems to be what's going on. If you want to surprise the market, you lay what's called a bear trap. Now, what would be the bear trap? The pattern is still one of higher lows, higher highs. We don't know where it will open in the morning. If you were to take out today's high, which was 118.29, and not take out today's low, that would be a bear trap. You'd have an outside day down. In other words, you took out Monday's high, low, you closed lower on the day than even the opener. Take that out, and what's the next number the market might go to? The upper Bollinger Band, 118.66. I wish I could tell you it was way up here. It isn't, but that would be what we call the bear trap. If the market closes, gets under 114.48 and closes under it, you put into play the possibility of getting back into the Bollinger Band, 100-day average of support, but I'm expecting a lot of chop in this 114.55 level. Obviously, the Asian markets and Europeans did not get to see all this because when the president tweeted this message out today, it was already later in the afternoon. If you add 6 to 7 hours for Europe, and then you go back to where the Asian markets were, they weren't open. So now they're going to react on that tonight, so get ready for that. You're overbought in addition. So you have an overbought market that's stuck. Now you can see what's formed in the sideways action of the Bollinger Bands whipping around the 18-day average. If it fell from here sharply, I'd look for the support to come in there, but I don't say that that's a buy zone. In SMH, the action here is a little more favorable than what we've had. You still have the higher lows, higher highs. It's having a heck of a time trying to get through that upper Bollinger Band, as it should. 95% of the time, the market will trade within these black bands. Take out 170, I think it's 172.08. Is that the number? No, 173.08. If you take that out, I would look for the market to step out of the trend, be back before you know it at the 18-day average, trying to figure out what to do. XLI, not a trend. You had, if you look at it now, a lower low you have and a higher high. There is no trend. Momentum's pretty flat. Don't be surprised to just hang around that 18-day average for a little bit. XLE, the energy sector, it lost its embedded reading. As far as I'm concerned, when you lose an embedded reading, let's go back another day, you lost it here. You kept it lost today. As far as I'm concerned, that means that this down thrust is completely over. You're just in an oversold market now. You got a higher high and a lower low. Why be involved anymore? QQQ, the pattern is suddenly shifting. You have higher lows. That's why these arrows, they're correct. But all of a sudden, you got lower highs. If you take out 273.44, you get a lower high, lower low. And if you close under 273.36 for the short term, you then have the trend down. You'd have the bias pointing down, the momentum rather down, the bias down. You put into play the possibility of 263.31. First thing is to get through it and then fight your battle at the 18-day average. The emerging markets, they tried to be better because the market was really looking at things. They were hoping for relief packages. We were seeing the dollar was getting a bit weaker here. That changed today on a dime. There is no trend at play. In GLD, what number did you fail at? Tell me where the 18-day average is. How often do I point this out to you? That's the battleground. You're there. You're still fighting it. Nobody's in control. You have a higher high, lower low program. When you come to the gold miners, all you did is rally to the 18-day average and fail. You fell back for the support of the 100-day average, but you stepped out of that short-term uptrend that you had in play. And as I said, I was looking for it to fail against the 18-day average. It missed it by 1 penny. I'll call that failing at the number. TLT has been bearish, but just yesterday, what did I say that I'd look for? I'd look for the pros to come out at the 200-day moving average. Could I have been more accurate on that call? You got down to the 158.68 level. That was it. And you finished at 160.43. Not bad. Am I still in the bear camp? Yep. But it's oversold. You can get a bounce for any reason. Time to take money off the table. Last, the FXE. I thought we were going to be stronger here. I really thought the dollar was going to go down and the currency's up. The president upset that with his action today. You go back to the drawing board if the market takes out 110.16. Right now, I think the bulls and I think the pros are long this market. I think they're long in this 110.68. We'll see. Not a big risk. Close over it, and I think they'll be talking 112.07 if you don't get stopped out on this right now. You know, I talk a lot about this and a lot more in the afternoon. At near 4 o'clock every day, I start recording my Spider ETF video. And the idea here is to help you stop second-guessing yourself on what's going on. That doesn't mean I'm right on my analysis. But the idea is you get to bounce your thoughts off of somebody that's probably looking at the same charts you're looking at. I keep adding more charts to this. I'm up to 37 of them, not 35 anymore. I keep adding new commodities. We'll update this ad probably as early as the end of this week. We just added the dividend high yields, OUSA. I've added bets, as you know. Jets is in there. We've got all them. So you've got to keep your eye on what's going on with those. The charts will look like this, and I cover, this is just some. I've added 2 more, as I've said. I want to get up to 40, so I keep looking for the ones that have good trading volume, good following. What are they doing? Some of these esoteric ones, now I'm not that interested in them, and I don't want them to be overly redundant. I want to get good ones in areas that maybe I wasn't covering before. Dividends that I saw yesterday made all the sense. How do you find out about it? Well, first, it's the price of a Starbucks coffee with a tip. Not much more than the $8.95. I'm assuming you get a big one. It's for 30 days, unlike the 15 minutes of relaxation you get from that coffee. Go to our website. Under the word research, it's all explained there. I'm Ira Epstein. I'll see the other subscribers first thing in the morning as I record my morning subscriber video on the futures, which ties into this because so many of the ETFs are tied right to the futures markets, and I give those recordings out at 5:40 in the morning, so my traders typically have it around 6:30 a.m. Central Time. I'm Ira. You have a good day. See you tomorrow.